Bitcoin has now broken below the November lows. We're in the low $70,000, more than 40% down from the all-time high. By almost every historical definition, this looks like a Bitcoin bear market. But before you automatically assume this has to end in an 80% collapse like 2018 or 2022, we need to slow down, because something very different is happening underneath the surface. This breakdown didn't happen in isolation. It happened the exact same week markets reacted to the nomination of a new Fed chair. And at the exact same time, gold and silver experienced some of the most violent volatility we've seen in decades. That combination is not normal. And when things are not normal, you cannot rely on old scripts. Welcome back. Today, we're going to walk through why this bear market may not look anything like the ones you remember, and why the signals forming right now suggest something much bigger shifting in the global financial system. Let's start with the obvious. Breaking below $80,000, the November low, was a psychological line in the sand. That wasn't just another red candle. That was the market removing the comfort of "we already found the bottom." By traditional standards, yes, this looks like a bear market. But when most people say bear market, what they really mean is the classic Bitcoin movie. Hype peak, leverage collapse, 70 to 80% drawdown, long crypto winter. And that fear is loud right now. ETF outflows, liquidations, lingering damage from the October Binance event, and now a macro headline that feels like the trigger, the nomination of Kevin Warsh as the next Fed chair. He's seen as a hawk, less tolerant of inflation, less eager to cut rates, more willing to shrink the Fed's balance sheet. And that matters because Bitcoin's run to the highs was built on one big expectation: easy money was coming back. That narrative just cracked. When that expectation broke, the reaction was mechanical. Risk came off, leverage unwound. Bitcoin lost support not because its fundamentals changed, but because the macro story traders were positioned for suddenly looked wrong. But here's where this gets interesting. At the exact same time Bitcoin is breaking down, gold crashed nearly 18%, silver nearly 40%. That is historic volatility for metals. Moves like that don't signal normal market conditions. They signal stress in the unit of account itself. In other words, the problem might not be Bitcoin. The problem might be money. Here's the cleanest analogy for what's happening. For years, the Fed has acted like a doctor giving a patient painkillers and antidepressants instead of telling them to lose weight. The patient is the U.S. economy. The weight is debt. QE made everyone feel better, but nobody actually fixed the underlying problem. Now you have a Fed chair coming in saying, "No more medicine." And the market's reaction? It panics, because the system is still addicted to the medicine. And here's the key question. Is Congress going to suddenly become fiscally responsible? No, which means something eventually breaks. So Warsh is the headline, but debt is the reality. Now here's where the old bear market script starts to fall apart. Because at the same time markets are deleveraging, we just saw ISM manufacturing flip back into expansion for the first time in 2 years. Growth signals are appearing, while liquidity stress is happening, while leverage is unwinding. That combination is rare, confusing, uncharted. This is not a clean risk-off environment like past cycles. And there's another piece people are missing. This might not be a Bitcoin bear market. This might be a crypto bear market that Bitcoin is still attached to. When over-leveraged crypto players blow up, they sell whatever they can, and Bitcoin is still the savings account of the crypto world, so it gets dragged down with the casino. The October liquidation event may have marked the beginning of something important,
the final separation between Bitcoin and the rest of the industry. That process is messy, violent, uncomfortable, but it's part of Bitcoin maturing into a monetary asset that doesn't need the rest of the industry to justify its existence. Now, let's talk about the fear everyone has. Okay, but can't Bitcoin still drop 70 to 80% like before? Of course it can drop more, but the assumption that it must follow the exact same pattern is not a law of nature, because this bull cycle was nothing like the others. We had ETF approvals, we had new all-time highs before the halving, we had corporate treasury demand, we had institutional rails, and we never had the blow-off top mania everyone expected. So why would the bear market be a carbon copy? It might be shorter, it might be shallower, it might be more frustrating because it doesn't give people the dramatic crash they're waiting for. And this is where people get shaken out, by clinging to a model that no longer fits. Bitcoin is being monetized in real time. That has never happened in history. And when you're watching something that's never happened before, you can't rely on old scripts. Your edge is not predicting next week. Your edge is understanding what you own. Now, come back to gold and silver. Those moves were not normal. They resemble moments in history when currency systems were under stress, like Weimar Germany, where gold priced in marks went vertical, not because gold changed, but because the money did. Bitcoin doesn't need a perfect environment. It thrives in a world where people start asking hard questions about money, trust, and debasement. If the denominator is breaking, Bitcoin eventually reprices violently. You just can't see that when you're staring at daily candles. So yes, this looks like a bear market, but don't blindly obey the script of an 80% collapse. This cycle already broke patterns on the way up. It will likely break patterns on the way down, too. Bitcoin's fundamentals did not change. What changed is leverage, liquidity expectations, narratives, and macro assumptions. And markets can stay irrational longer than people can stay emotionally calm. That's the real battle here. If this helped bring some clarity, share it with someone who's panicking right now. Drop a comment. Do you think this is mostly a crypto leverage unwind or something deeper breaking in global macro? Like the video if this brought you signal over noise. Subscribe so you don't miss the next one. And remember, there is no second best.